Good morning, traders and investors. Welcome to Thursday's edition of Benzinga's Pre-Market Prep, brought to you by Options House. Joe, you awake over there?
I'm awake over here, and I just want to say that Options House is the jam. Otherwise, we wouldn't have this show. So thank you, Options House. Just a quick morning shout out on that.
The jam, is that like a 20s term or something?
Oh,
Or?
actually, I have a question for you, Joel. Do you like strawberry jam?
Yes.
How about rawberry jam?
Yes.
No? Okay, you like rawberry jam too. That's good. So, Joel, what are we talking about today, my man?
Me and you, I guess we don't. Dennis is like all hyped up about this merger.
Yeah. Well, how
I'm
about
pumped, man. It's been a while. It's been a while since we've seen a merger. J-Dot's pumped up, too. He's throwing snowballs at you in the chat there, Joel. You see
How
that?
come, man? What's up?
J-Dot guy? A J-Dot guy. He's trying to wake you up, man. Wake you up in the morning. A little bit of snow in the face. That'll help you wake you up.
Actually, it's a balmy 16 degrees outside right now, Dennis. A little bit warmer than yesterday. But, Comcast actually just got a little bit more money out of me the other day. So I contributed. That's what I think right now.
How did Comcast get more money out of you the other day?
Well, your promotional rate runs out, so you have to call back and say,
okay.
I don't want to pay this. I want to pay what I was paying beforehand. And they go,
You gotta
well, we don't have that promo anymore, but we have the exact same promo for $5 more a month.
So they get you for the extra $5.
So they get me for the extra $5 and claim that it has better internet or faster internet.
Maybe that's why the stock's popping off those pre-market lows.
I haven't done my
$5 from Joe.
I haven't done my basic phone call to them to tell them that every time they increase my rate, I tell them that unless they keep me at the same rate, I'm going to DirecTV.
Mm-hmm.
And it's worked several times. I don't know. I think they might be marking my account because it didn't work last time, so I've been laying
No,
it
they
up.
always say just call back. That's what she said to me the other day. Just call back in a few months to the customer care department or whatever. Don't go to a customer service rep and say that you want to pay this rate again, and they'll give it back to you. That's how I wound up with HBO free for a year.
Okay.
I think you just blew your cover, Joel. You just told everyone on international radio.
Yeah, if there's any
This little trick you
Comcast
got.
customer service reps out there, his name is Joel L. Conan. He lives at 5639. No, just kidding.
So big merger, Dennis, huh? We
yeah.
haven't had one of these in a while.
It has been a while. This one has been in the rumors, though. This one's been rumored for a long time. If you look at the chart of TWC back in November, when these rumors first started, it was going to be a Charter / Comcast bid, but it was all rumors back then. And then Charter came in and bid, I think it was 132.75, and that's been on the table there, but obviously they were thinking that's not going to be enough. Well, Comcast stepped to the plate here last night, broken by David Faber. Brent, was David Faber tweeting there after 8 o'clock last night?
Yeah, it was around 9:30, I think. He tweeted, Comcast buy Time Warner Cable an all-stock deal worth $159 per Time Warner Cable share. Said the deal could be set for as early as tomorrow morning. He did indicate toward some FCC scrutinization. Said that this will definitely be under tough review by the FCC. And the other tweet that he had said Comcast is willing to indicate a willingness to divest 3 million subscribers from the combination if they do a deal, that is.
So this deal is going to be for 2.875 shares in an all-stock deal. So CMCSA, this is your ratio for you risk arb traders out there. 2.875 shares of Comcast per Time Warner. That's the ratio that it will probably trade in, with a little bit of risk premium put in this one. This isn't going to be one that's probably going to trade above the takeout price because of the FCC. There is definitely going to be some scrutiny here. So I'd imagine there will be that little bit of risk premium. But interesting enough, Joel, both stocks actually, the stock that's getting taken over is trading higher, but the stock that is acquiring, which is Comcast, is trading down in the pre-market. And this is the way it used to work. Lately, when you get these mergers, both stocks rally, but not the case today. Comcast is trading lower here in the pre-market.
I think there's a lot of skepticism here as far as the regulatory approval of this going through. I mean, what percentage of cable are they going to have in America if this thing goes through? I mean, that's probably why you're, seeing a little bit of a sell-off. There's definitely some skepticism here. You said 159 was the takeout price, correct, Dennis?
All stock deal though, so you got to do the multiplication. That was based on the closing price of Comcast at 55.24. Right now, 54.42. Let's just do the quick math here. I'll do it in my head. Actually, no, I'll take out a calculator and do this. Times 2.875. So at the current price, it's 156.45, and it will continue to move based obviously on the
On the
Comcast
Comcast
price.
price, huh?
Yeah, so 2.875 is where you get. But even if you look at that right now, we are significantly below that on the TWC. It looks like they're putting about a 7 to 8 points of risk premium in here for obviously the FCC, not knowing if this deal will go through.
I don't know. I think that's a lot of skepticism then about
8 points worth of it, yeah, that is
Yeah.
quite a bit, considering how many mergers we see lately, and they sometimes trade above the takeout price. So, putting an 8 point risk premium on that's pretty significant. So
Right.
there's
I guess if you're,
concern.
if you're confident that it's going through here, you got a bargain. But if not here, definitely a risk premium to pay attention to.
Yeah, for sure. But it's exciting. Actually, interesting enough, Charter was the one that was involved, CHTR. They were involved before. That was the rumors, and they had made the initial bid. Looks like Comcast trumping them. But Charter really getting beat on this thing right now. It's down $9, CHTR, trading at $129. So market not happy that Comcast is jumping in here.
Yeah, J Dot's also popping in here that there was some rumors floating around that Apple might be sniffing on Time Warner Cable. But
I never heard that one, but
no.
it looks like it's Comcast. That's the deal, anyways. Here,
Well,
at least right now.
sympathy plays here. I mean, Charter's going down. I mean, I guess bad for Charter Communications. I mean, how many big cable companies are there in the in the country? Really, this really narrows the focus down.
I mean, the direct, obviously, sympathy play you've got to be watching is Time Warner itself, TWX, the stock. It was trading up pre-market here up to $67, which was a little bit of an overshoot. It was shooting up $2 on this. It's actually back down to reality here now, trading down at 65.5, but it is opening higher on a day. The SPOOs are down 9, so TWX could have a little bit of relative strength, seeing how TWC is getting taken over.
Okay, all right. Speaking of the what's
Yeah.
going on with the S&Ps, Dennis?
Joel, they're down here. Look at this. And weren't you talking yesterday that there was a potential double top? Did that kind of hold? Or
No,
was
it
that...
didn't. It didn't. Shook me like right when I got to the top of the tree. I was the 1950 level was holding. It was also holding in the pre-market, but they did enough just to get the shorts out of there. Got above that 1819 level, went to 1823, and I was thinking about what Harlan was talking about, and just the market going to resistance, and it's just a question if the market could get back to those all-time highs, but. People are just peeling out ahead of it, and
Yeah.
there was not a lot in the 1820 handle to lean on. I thought when we got through that 1819 that we were going to see 1828, and that was a level that we really fell off from. That was on the big down day we had that finally took us under 1800. But we got to 1823 in a Q, and then it turned around. I was discussing it with Brent on the desk. Here's one of these occasions where if you shorted it up going through the previous day's high the first time, 1950. You took a considerable amount of heat, 4 handles. It depends what your pain threshold is. On the other hand, if you would have shorted when it came back down through that number,
Yeah.
you wouldn't have taken any heat at all.
That's the best way to do it too. And I'm learning from you, Joel. It's better when the things are going up, maybe let it, but keep that level in mind when there's a big level. Like look at Tesla too. This is a great example from 2 days ago. I know we talked about it, but bring up like the 3-day chart there on Tesla and look when it went up through 200. Obviously, it opened up there. You obviously, well, I guess you wouldn't take any heat because it actually opened up there. But either way, it went up over 200. But when it came back down through 200, it never got back above it again. I really think there's still some people caught there that were playing it for the breakout there above 200, and they're wrong. And Tesla has shown some relative weakness here the last couple of days because of that. Obviously, the market doesn't help either. But the market really wasn't down that much yesterday, and Tesla was down $5. So that's a classic example of that. It's better sometimes to short it when you got the momentum going with you. So it might take out your key level, but if it comes back down and takes out and goes through it again, then you might have a good trade where you might not take as much heat.
Right, and Tesla, it's an example of the whole number theory. Once it did get it back above 200, probably that was a trigger for some stops, to short to say, okay, is it 200? I'm throwing in the towel here. But you did get a spike here in the pre-market down to 190.26, and you've got a little bit of a pop. I just want to alert our traders that we had a low at 189.32 on Monday, and if we do break below that level, you got a vacuum area down to 186.63. That would fill the gap up from Friday's trading. So, you'd probably rather, selling on the way up than, trying to catch this thing on the way down.
Cisco earnings, Joel, they do the same thing every time with this stock. They usually pop it a little bit on the earnings report and then they kill it. And they did the same thing again last night. It was popping up on the initial report. It got above $23, got all the way up to $23.27. They reported earnings of 47 cents versus 46 cents and 11.2 billion versus 11.03 billion. And the headline numbers, everybody thought, oh, maybe that's good and they're going to buy this thing. Not so fast. It comes back down through settlement. There's another classic example. And I tell you, you look at the charts here, 23 was absolutely enormous. So when they're buying it back above 23.27, that was kind of a gift. And the stock just got killed. They knocked this thing. How low did this thing get after that?
20,
got the 21 handle.
Yeah, 21.69. You hit that at just about an hour after the earnings release. Since hitting that 21.69 low, you have popped back up over 22 here, finding resistance 22.15, 22.20. Though if you look at the dailies here, that $23 level, people have been perched there in mid-January. Couldn't quite get there over the last few trading sessions. Basically, you've had 5 tops between 22.70. Excuse me, 4 highs between 22.72, 22.92. You did have the high right on the kisser at $23. So that resistance, if you were shorting it in the after hours through 23, you're like, whoa, oh no, 23.20. On the other hand, if you were quick enough to catch it on the way back down as it came to that level,
Yep.
Whoa, look at that. Now the regular session here, let's look. We're trading down 78 cents. 22.52 was the low from, actually, you had 3 lows between 22.52 and 67. So any rally 50 cents away from here should find some major resistance in Cisco.
And it's knocking the tech stocks down a little bit here. They're down a little more relative than the S&P futures, but Cisco definitely doesn't have as much influence as it did 3 or 4 years ago. But it's probably going to be some of your networking stocks and could show a little bit of weakness here. Let's look here at a couple other ones because we got Fari coming on in 20 minutes, so we're going to kind of fly through some of these earnings. Whole Foods trading down significantly. Their report 42 cents versus 44 cents is a miss, and 4.24 billion versus 4.29 billion is a miss. So miss on the top, miss on the bottom. WFM trading down $3.50 here in the pre-market.
Very expensive foods at Whole Foods. Got a pop here. Been rallying the last couple days. Street kind of leaning the wrong way here on the number. Took a dip down here to under 50.50. Got down to 50 and a quarter and got a nice bounce since then. This stock had just been kind of having a nice, actually a pretty steep rally here. If you wanted to draw a trend line in here in the dailies, it definitely fell out of that. Looking at the dailies, you got a long ways to go to yesterday's range, which was 55.22. Probably a whole half and whole numbers along the way. 52, 52 and a half, 53 will provide some resistance. Looking at the lows here, the current low of this move has been 50.62, and you've got to a level of 50 and a quarter in the pre-market. So that's a support that you have, 50 and a quarter, 50.66. See if it gets back down there again.
$50 is absolutely enormous on this stock from a psychological perspective, from an options perspective, and from, if you look in April, May, June, multiple lows in the $50 area. We didn't quite get there in the pre-market, and we didn't quite get there back in January or back at the end of January, but we have tested that level multiple times in the past. It's held that level in the pre-market. If the stock continues to slide, I think you find huge support in the lower 50s. I don't know if you're going to get another chance at it there or not. CBS also reported earnings, and this stock is popping nicely. Joel, remember back in the day you were saying this
Don't.
was the buy, man? And I actually did buy some of those shares, and I sold them way too soon. It was like at $32. I was like 2 years ago, and you were convinced that somebody like Apple might come in and buy them with all their cash, looking for content for their Apple TV. That wasn't the case, but regardless, the stock has almost doubled since you were talking about that, and that was back in October of 2012. Now the stock reports earnings here, 78 cents versus 76 cents, a $1.5 billion accelerated buyback, and this stock is trading up at is it new highs right now, 64.30?
Oh yeah,
Is that?
yeah, and
Yeah,
yeah,
that's breaking
actually,
out.
yep. Pre-market 64.84 high, backed off to the 63.50 level on two different occasions. Former all-time high was a double top at 64.06. So back at the end of last year, it topped out there twice on the 30th and 31st. Keep an eye on the $64 level. Yeah, if you break down back below that, and you got some room to get down to fill to yesterday's cap at 62.04. But look at this thing. If you if you were sharp here, you could have picked this thing up at under $56 at the beginning of the month. The break with the market went down to 55.71. We've rallied 10 points here. Might be a little bit too fast, too much too fast for CBS.
I think they might hold on to the gains just because I was judging from the after hours action, and I actually was trying to get down and dirty in this a little bit last night. I thought that 64 level might hold. I was trying to short the stock. I did. I actually did get covered a little bit lower there, but then it started to just climb, and it kept climbing. And then it was trading above $64 with pretty good volume too. So it's not like it just went up there and came back down. It's been hanging out here. It's been trading above 64 here all morning. Obviously, 64 is the level that needs to hold, because if you subscribe to the old resistance becomes new support theory, then that 64 is key. Starts taking out 64 and get down like 63 and a half, then this thing could start cascading. But I remember last time I think this stock reported or something, it was kind of a gap and go, but I don't see it on the chart, so maybe I'm just making that up. But CBS here, I think it could be a scenario of a gap and go today. I don't think it's going to be one that gives the gains back. Also reporting earnings, Pepsi, Joel, and actually the earnings are pretty good. $1.01 versus $1.05 versus $1.01. They're boosting the annual dividend from $2.27 up to $2.62, and they're raising their current buyback up to $5 billion. Sounds like a lot of good news.
Yeah,
Not
what's
so
going on?
fast.
Yeah, I mean nothing
Yeah.
but good news. What do you think about that, Dennis? It's kind of sell the news here scenario.
Yeah, I don't know. It's funny. These earnings reports, sometimes, you think they're going to go up and you think, oh, there's got to rally it on this. It was trying to pop a little bit there when they broke earlier on this morning, but it really was light volume. And
Mm-hmm.
now they've come in with their selling shoes on a little bit, and very light volume here yet, so anything can still happen. But I'm seeing a 2,000 share seller at 81.5, which is that settlement. I'm seeing this guy sit at 81, and it looks like he's refreshing there because we've traded about, I'm just looking through the tape here, about 1,500, 2,000 shares there in the last 10 or 15 minutes at 81, and it's still offered at 81. So that's telling me somebody's got more to go there. So interesting enough, this could be one of those scenarios where the report's pretty good, but the stock doesn't rally.
Yeah, an 80.98 was the low from yesterday's trading, so that's a good swing number there. If it get back 81, perhaps get up and test the close. Nice support here at 80.16 and 80.33. Those were the two lows from Monday and Tuesday. So split that area, call it 80 and a quarter is a potential support area. If it does fund, if there's no bids at 80, falls under 80 here. Not a lot in the 79 handle until you get to 79.26.
CBS, is that where you're talking about violin maker? Was it in the 80s years ago? Joel, go back on the CBS chart because we were saying that was an all-time high for CBS, and now we've got violin maker popping in that it was back in the tech bubble there in 2000 area, that it might have been in the 80s. Do you see that on the chart?
I'm going on my monthly here, going back 20 years, and It's not giving me 20 years worth of data here. And then also I was looking on my other platform here, and for some reason the data here does not have it going back that far. Let me see if I can do a quick. Maybe it's my. No, I got it 20 years back, and for some reason, I'll have to take a look. Maybe take a look at the Google chart. Sometimes it helps you out on that.
Also reporting earnings, Barrick Gold
Ooh,
ABX. And
yep.
this is one, it missed. Missed earnings, 37 cents versus 41, 2.93 billion versus 2.84 billion. So they did beat on the sales, missed on the bottom line, but the stock is lifting a little bit here in the pre-market. I guess they're saying these earnings aren't that bad. 1916 is where it's trading right now, so it's up 20 cents here on their earnings report.
Gold also kind of trying to get through 1300, but running into resistance here right under the 1295 level. Let's take a look at American Barracks here. The stock has been trying that. Actually, has had a nice rally here from under 1550 up to 20 bucks. Initial news came out, got a spike to 1953, coming back, finding support at the $19 level. Looking at yesterday's big range yesterday in this thing. Opened up right at the high, 1965, made a 1969 low. That was 3 cents shy of Tuesday's high. Sold off pretty hard. I just keep an eye on the settlement here, 1897. If they can hold that, I think you go back up and trade in the 19 handle. I think you get any kind of rally up towards that 1970 level, and that it's going to be major resistance. That's been the high of the move so far.
It was a big reversal day in a lot of the miners yesterday. So despite gold actually holding up pretty well, I don't even think gold was really down that much. You had the miners reversing. Look at the chart of AEM and I always say this wrong. Agnico Eagle Mines. And the stock put in basically a triple top up there in the whole mid 34s. You had 34 and a half, the high 3 days ago, 34.55, the high 2 days ago, and then yesterday's high 34.34, and we reversed hard there in the afternoon, started cascading down through handles, closed down at 32.88, and this was the story in all of the miners yesterday. I guess they were just a little bit overbought, and they started giving her back.
Yeah, and now you look at AEM, came down to 32.73, and you had a 32.82 low back on Monday. You have taken out that area now, so if you get a pop back up to the close, and the low should be resistance. Support in this thing is very spotty here. If gold starts to roll over, this thing keeps going. You're just sitting at the pre-market low here at 32.57. If this thing does not get a little bit of a open up and at least get some attempt to rally here, you could have this thing trading under 32 bucks in a hurry. You had a close on Friday at 32.31. We're only 20, 30 cents away from that. The low on Friday was 31.27 here. So a lot of air underneath these gold stocks if they continue south.
You also had Gold Corp just reporting 10 minutes ago here. They reported earnings of 9 cents, and that's disappointing the street here a little bit. And it's actually trading down about 35 cents on this earnings report right now. Just ticked down to 35 or 25.69 after going out at 26.04. Again, the big reversal day yesterday put in a double top right on the button. 26.90 the high 2 days ago, 26.90 the high yesterday. Hit that, and the bottom fell out of it down to 26.04, closed near the lows, and now it's cascading down through a little gap area too.
Yeah, I had found some support at $26 level that has now been taken out. And look at those three highs that you had at just above the 25.50 level. 25, let's see here. 25.60, 25.59, and 25.62. Those were three tops. Broke above that and made the rally back. Now you come back. That should act as some support here below 25.50, and we could easily be trading under 25 bucks down to 24.87.
Also reporting there last night, earnings from MetLife, MET, and the stock is trading up a little bit here. Very, very, very light volume. Only 440 shares have traded, but it is bid up here as well. The earnings were $1.37 versus $1.30, and 18.38 billion versus 17.43 billion. So beat almost by $1 billion on the sales. So it's a nice number, and the stock is bid pretty heavily at 50.22. There's 4,100 shares, which is a big bid in the pre-market for this stock. Then the best offer's up at 51, so it does look like it might open up in the mid 50s here today.
In the mid 50s. If that's not in the middle of nowhere here, I don't know what is.
It really is.
I keep an eye on this 5103 high on January 24th here, as this stock had several bad days in February. Just really lost. I went basically from 54 to under 49 in 4 trading sessions here, and now you're going back into that area. So could find some whippy trading there. I would use 5103. The high on the 24th is the first target. And then the rest of the 51 handle is pretty spotty here. I see a 51.43 close on the 23rd, and then you don't get resistance up at the 52 handle.
You know what level I like is the $50 level here too, because in or mid-December we came down, tested 50, and then we broke through it obviously a few weeks ago there. Then we kept bumping up against it 50, bumped up 2-3 times, finally took it out for the first time yesterday. Now on a decent earnings report, we're trying to bid up. If it goes to pull back, I wonder if that 50 could, the old resistance becomes new support trick and be just above settlement too. So I wonder if you could get a shot there if it could bounce off that level.
You gonna try and buy it there?
Yeah, I might get down and dirty there. Obviously, if it takes out, I would probably stop out below yesterday's low. So you got to give it some. 49.50 was yesterday's low. So that's a problem. I don't usually like giving them 50 cents a scalper that I am, but you kind of almost got to do that. But if you want to lean on the 50, I guess you could lean on settlement too and say 49.88 and stop out at like 49.80. But it's all about risk, obviously limiting your risk on every trade. You can put any trade on as long as, especially for a day trade, as long as you know where your out is. Always define your risk before you enter the trade. That's the tip of the day.
So you're gonna try and buy a stock with the S&P's down 10.5?
Yeah, sometimes. Sometimes I don't mind doing that. I mean, sometimes the market can reverse here too. So we're down 10.5 here this morning. I'm just looking at the pre-market here, and obviously some of the weaker stocks here are the financials once again. It seems like, when the market turns around, these things are the first to go down. Bank of America's trading down a cool 1% right now at 16.59. You got JP Morgan in the pre-market trading down 30 cents. You got Citigroup trading down 40 cents. So it is financial based. MetLife Insurance is kind of financial too, but we'll keep an eye on it. I'm going to keep an eye on that $50 level, and I don't know if we get down and dirty. We'll have to see where the market is an hour from now as well.
Okay, all right.
Celgene,
Celgene.
2-for-1 stock split.
Oh.
Board approves a 2-for-1 stock split. We're starting to see that as the trend, I guess, where these big $160 stocks are coming in with the splits. I do have this one in my investment portfolio for full disclosure. Stock not popping on this report here, though. The board's approved it, so I guess it's a done deal. 160.54 is where it went out. It's trading down 70 cents right now, though.
It is trading down. Just made a low at 159.85. Just kind of, 159.84. Just kind of sitting there. Stock had just a major run from under 150. It's nice. You put in 3 or 4 lows between right under the $148 level. They love that. You got a major pop yesterday. You got all the way up to 163.14. Now that we're trading down here in the pre-market, we are right at yesterday's low. So if you're looking for this thing to hold and rally, should do it off the hop. Minor resistance at the close from yesterday, 160.54. Not really reacting here to the stock split.
Yeah, no, very muted response here to the stock split. So I'm not sure what to think of that, because obviously when MasterCard announced it, it really popped up, but that was a 10-for-1 split here, and this is just kind of everybody's just shrugging away and not even really interested in it. So let's check out Triple D, the stock from yesterday, because we saw some reversals. We were talking about some of these big guns like the Teslas and the Facebooks that actually did not make new highs. Triple D ran into some resistance 2 days ago. I was looking at this whole $70 area where it kind of had support back in November, and we had sold off obviously on the disappointing guidance. Stock had rallied 14, 15 points all the way back up to just under 70. And then yesterday, the bottom fell out of it. It actually closed kind of strong. So despite the stock getting down to 64.46 in the regular session, it did close on the highs, or near the highs at 67.17. Down here a little bit in the pre-market with the overall market.
Yeah, you gonna try and scalp out of that piece you had,
I
or
did. I sold it actually. I
yeah,
sold it. I was thinking that if the thing got up to the whole $70 area, that I think it's gonna. It was too much too fast. I bought the stock, the little piece, the small piece that I had at 55 and a quarter, and it literally was. I was up 21% in 3 trading sessions. So I actually scalped out of it 2 days ago. I think I sold at 67 something. So I took a quick 12 points out of it. If you can take 12 points out of something in 3 days, I mean that's sometimes it's getting greedy. So I think it's a little bit too much too fast. I am looking to get back into this thing in my investment portfolio. Love to get it maybe in the mid 50s again, even lower 60s to scalp back into the investment. But as a trade here, I'm not sure if I'm liking it here. I think this whole $70 area is going to continue to provide some resistance.
yeah. I mean, you have people that took a shot on the on that big down day and just probably bought a bunch of stock, just not for a long-term investment like you, but just more hey,
Days.
just as a standard deviation move. Got in just kind of after it had that big down day, then it just kind of struggled and made new highs. After the dip day, 65.73, it made incremental new highs, 67.18, 67.85. Just kind of kept tightening it up, but hit the 69.07 level on Tuesday. Couldn't quite get there on Wednesday. It took off. Maybe if you're looking to get back into this thing, Dennis, maybe take a look. You've had a 54 and a half low. What did you do? You rallied 15 points. Take 7.5 of that. Get you back into the 60 and a half, 61 area. Just a little 50% retracement to trust the validity of this up move. Also a low at 60 and a quarter. I think your ride back down this time is just is going to be a little thicker with bids here, as people feel that they kind of missed out on the bottom when we went to 54.63.
Brent, we got some jobless claims numbers that just broke, did we? So we're bouncing around. We're getting a lower here on the S&P futures if Brent is there.
The jobless claims number, I'm not sure if it's I think it comes out at 8:30. I mean, the S&Ps have just been melting anyways here. It's not been, hasn't been any major upticks here. Let me see if we can find some support for our traders here.
Brent's busy. I'll give you the jobless claims
Okay,
number.
go ahead.
So 300, or unless he's there. Are you there now, Brent?
He's banging away there on the keyboard there.
339,000 versus 330,000 prior, 331,000. Brent always does a better job at this. USA continuing job claims for February 1st, 2.95 million versus 2.95 million estimates prior, revised from 2.96 to 2.97. Retail sales coming out month over month for January down 0.4% versus analyst estimates of 0%. So looking like a little bit weaker here, and the market has fallen off about 2 points since these numbers broke.
Yeah, big, kind of a scary area here in the S&Ps. Just take a look on the chart. We did. I mean, you realize we had almost like a 90-point rally off that 1732 level. Looking back, you had your low going back on Tuesday. You had a low at 1794 and a quarter. I mean, really, that is your next major support point. 10 points away from here, Dennis. I don't think we're going to get there here. What I like to keep an eye on when the S&Ps are having this kind of trading, just kind of going down, is, wait till we see, where the low is, 925, 926, and then, see what happens off the hop here. But kind of a slow leak.
Yeah, and some funny things can happen with your individual stocks at 925, 926, at 928. The continuous book price comes out, and that's basically telling you where the stock is specifically indicated open. And those numbers quickly adjust because if something's indicated open down $1 and there's no news on it, people will come in and start buying the stock, and then that will pump it up farther. So it's funny, a lot of funny things happen in those 5 minutes before the open. The imbalances adjust. Continuous book price is really changing rapidly. So that's why you see a lot of action, a lot of movement, usually 2-3 minutes prior to the open. But it's looking like a weak open open right now. This is the first down day, first week open we've had in what, a good week and a half, eh?
Well, we've had one heck of a rally, right, from that 1732 level, just a little bit, perhaps too much, too fast. And see if we can pull back here and get another chance to buy the dip, right?
That's it. All the buy the dippers, they seem to always come back in. So what's the first level, Joel? Where do you think this thing could reverse here? Because we're down 12.5 points here right now. We've had a low of 1802.75. Do you got a level on your radar where you're thinking the buy the dippers might start to sniff again?
I'm really trying to be honest with you here, Dennis, and you really don't have any major support down for another 10 handles.
Whoa, that's a scary thought.
Yeah.
Well, let's go get Fari. Let's go get Fari.
Yeah,
and see
maybe
what
Fari has some
thinks
better
too.
news for us, right?
Let's go find out.
Okay, we're going to take a quick break and bring in Fari Hamzei. Welcome back, traders and investors. It's Thursday and it's 8:35, so it's time for Fari Hamzei. Fari, how you doing today?
Good morning. I'm fine. How are you?
Good, good. We got the S&Ps in all-out retreat here. We want to see what's your crystal ball saying today.
Well, we came and hit 50 bar MA day before yesterday. We went through it a little bit. And then yesterday we had a kind of like a doji, didn't do anything. Range was very tight. And so we felt that we should have started rotating. And of course, here we go. Right on the mark, and we're down 14 points on the S&Ps and about 26 points on the NQ. So it's a big move down.
Right. I'm sorry. Go ahead.
No, please.
No, I mean, I look at this for when I see these kind of pullbacks and stuff. I really like to, rely on daily highs and lows here. And just looking at my dailies here, I mean, I see 1794 and a quarter. That was your low on Monday, and that coincided with a couple tops here. But man, I just don't know if we're going to get down another 9 points from here on this downdraft. Do you have an intermediate number in between there?
Well, the pivot this week for the ES, this is the March basis, is 1773. And yesterday we pretty much traded around the first resistance level, what we call WR1. This is the weekly resistance one. But from that point, from WR1 to WP, the weekly pivot, that's quite a bit. That's let's see, 27 plus. That's 44 points. That's a lot of move.
Whoa.
So I don't see us hitting 1773 today, not in this session, coming up session. But if the downdraft continues, you can't rule it out for a Friday closeout that area, 1773.
So are you thinking this might not continue today, but you think tomorrow we might get some follow through here? Is that what you're thinking, Fari?
Well, if you look at January, I believe, if I'm right, 3 out of the 4 Fridays were down. People are saying, hey, do I want to hold this over the weekend or not? That comes up. So if that pressure continues, any move usually comes in 3 days. So at least we could have maybe today, depending on, of course, that's where we are now. It all depends how cash market operates. But maybe tomorrow, it could even also go to Monday. You can't rule that out.
But there's
and
a lot.
usually 3 days down takes care of a lot of selling.
But we had such a vicious rally on the way up, and anybody that was shorting this market on the way up really was probably scrambling trying to get out. And I wonder if you caught a few shorts on the way up here. Do you think some of those guys might be itching to obviously cover here on these pullbacks now, or even the buy the dippers that missed this rally? Are they going to be coming in here too, thinking, "Oh, this is my second chance"?
Well, absolutely. And remember, as you go up, this is the futures are zero-sum game. So everybody who was long, somebody else on the other side was shorting it, right?
Right.
So new shorts are established, and that's how we went up. And now the weak longs are going to be in pressure. Those people with the small accounts or near margin or over trading, those are going to be the ones who would be into pressure, and they have to respond to margin calls. So that would be forced selling. But you can't rule out that there aren't shorts here. There are plenty of shorts here. At any given point, people have different opinions. We had two trades on. One was a long, short-term SPY long, and one was I believe, IWM long-term with a put. So the downside. Well, no, I'm saying it was also a SPY, and that's like April. Well, we covered our long SPYs day before yesterday, on a I guess it was a fourth day up, if I'm right.
Yeah.
Yeah, we had a fourth day up, and yesterday we didn't do anything. We didn't establish anything, but we held our SPY. Those are, I believe, April puts, and these are outright put, not a spread, but outright put, and those are going to be doing very well today. So it's all timing.
Now, why did you take your position off? Just because we had come too far too fast, or because we were approaching like resistance? What was the
First of all, it was in the money very nicely. Two, it was short term. The expiration was coming up. These were weeklies. Yeah. And as you get to the last week of it, your theta kills you because you start dropping value of. Remember, options are decaying assets. As they get to the last week of its expiration for that weekly, the drop is very fast. So what you want to do is be able to get out Monday or Tuesday before. And we got out on Tuesday. So it worked out for us. We were lucky.
Any individual stocks on the radar today? I mean, it's Thursday coming into the weekly expiration. I noticed LinkedIn. It had the bad earnings, but it was kind of a delayed reaction in it here. You got any potential setups for LinkedIn, or is just going to let this thing just keep falling, let the dust settle?
Well, LinkedIn right now is in a channel. It's between -1 and -2 sigma. And it's been there 3 days, okay? At least 2, maybe 3 days from what I'm looking at right now. Now, once you get in that channel and you get a downdraft in the market, the bleeding will continue, especially if it's a slow, the LinkedIn itself. If LinkedIn slowly sells, it will continue. If it's going to come back, it needs a flush.
Right.
Where people panic, they all sell, and you run out of sellers. Then there's a possibility of a buy setup. But I think, given the downdraft right now, pre-open, I don't think we're going to see the 3 sigma on LinkedIn until at least Friday.
What would the number be if it got to 3 sigma? Where would that be?
I will give you. I'll tell you what it is for today. There we go. It's would be 188.
188.
Yeah, that's 3 sigma for today. You can calculate, estimate where it's going to be, but as we start moving in the channel, actually your volatility will expand, right? So your bands will widen. So you have to be extra adjusting for that estimate. The 150 is, let's see, what is this? No, that's wrong. Forget. Now, another way of looking at it also is if you step back, because remember, not everybody trades the same way. Some people trade also weeklies. The long-term players, the larger positions. The three sigma weekly, okay, is 183. 183 and a half. So somewhere in that area, you may find some sort of a support, because typically by then, some of this thing has stopped.
Gotcha. Now, are you looking at, were you getting down and dirty in Cisco there too, Fari? Because I know you like to get ahead of these earnings reports sometimes, and this one was a little wild.
Cisco we haven't traded for a while. Reason is the pricing, and there's so much stock of that price, which is trading at what, $22 right now, 22.11.
22. Yep, 22.11.
Okay, where's the juice there? You got to pick your option pairs carefully, both the name and the pairs. This stock is not very volatile. If you look at its weekly, we've been trading in a very tight range. It's a $20 stock. I think you have better choices out there. So we haven't touched Cisco. We do listen to its earnings. We watch that. I think it's a critical name in the tech sector. But in terms of us actually putting dollars to work on it, no, we pass.
Not enough bang for the buck, huh?
Right, we have better choices. You have Netflix, you have Tesla, you have Baidu. You have,
like
if you want to get fancy, you have Google. In terms of if you want to play. Go ahead.
You like the high price stocks then, eh, Fari? Like the higher.
Yeah, I like to see stocks over $100 and preferably like under 500, because that's a sweet spot. Google is a special case, and you want to touch that at earnings time.
Okay, just to wrap up the show here, Netflix has, it's had a nice run here after earnings, kind of continued to move up, making all-time highs here. Is this you waiting for some signals in this, or you got a feeling kind of continuing to run? Now it's just kind of had a tight range yesterday. You think this thing is getting ready to give back a little bit of the profits?
I think a little bit is in order. It is in the channel on the upside, +1 to +2. It has not actually exceeded +2 yet, and its +3 is almost 500 on the daily charts. That's way out there. So as long as it doesn't get shaken up, I think it may ignore the market and stay in that channel. But some give back is in order. It's down pre-market $3?
Yeah, it's down $3.
Yeah.
I'm just looking at had just a perfect double bottom yesterday, 25.51 and 25.54, and then you had the low on Monday at 24.28. So to me, if this thing can't hold 4.25 off the open here, got a long ways to go to get to Friday's low at 410.56. Are you just paying attention to your sigmas, or do you pay attention to chart patterns like that as well?
Well, chart patterns from a candlestick standpoint, a couple of critical moving averages.
Okay.
Also look for whether we're getting outside bars on a daily, or more importantly, weekly charts. Actually, its weekly is very constructive here. If you look at the last 4 weeks, it's at 3 solid green. This week is the only week that has pulled back a tad. Right now, the way it is, the last 3 sessions, the range has been tight, but we had 4 days ago, we had a pretty good range, and then about 2 weeks ago, we had also pretty good range after the gap up. There's a gap there around 22nd of January. I assume that's the earnings.
Correct.
Yeah, it looks like earnings. Yeah, I mean, look, it's a pretty strong momentum play. You have a lot of people in it. I just hope that it stays in channel. When it leaves the channel, either to the downside is losing momentum, stop. You got to do something. If it goes up to 3 sigma, it's gone too fast. Now the buyers are running out, and most likely the shorts will have more power.
Now,
The 3-day rule also applies on the upside. It's a little bit slower, that's all.
see, when I look at this chart, and it's funny, this is why we have a market, I kind of look at it this way, and I'm not a big quant guy, like you're a lot more quantitative than I am, but I'm kind of like a logic trader, and what I look at is we had the big breakout here, obviously, was the upgrade that propelled us up there 4 trading sessions ago, and now for 3 days here, we've kind of paused. We've got a bulls and a bears. We've got some of the guys that were long the stock taking some gains. You got some people saying, oh, maybe there's a double top there, maybe shorting it. So it's kind of like jockeying and ready, but a lot of times what I think is it has a pause for a few days and then a continuation of the initial move, which I would be looking, more of this from a breakout perspective. If this thing could get above the high that it had a couple of days ago, 435, I think it could march to 450. Do you leaves any logic, or are you pure quant?
No. I look at. I'm open. I keep all options on the table. What your analysis is, basically, you're describing your growth company. The company is still in its growth phase, and it has got a steady. If you look at monthly, beautiful channel on monthly. It has 2, 4, 6. I'm sorry, 2, 4, 6. In the last 8 months, it has had only one down month, and it is still within the parameters of the channel. It did not violate the channel. So I think once the noise quiets down on the market, because you have in any stock you have 2 components. You have the stock specific events and you have market events. Once the market eases up on the shake, on the volatility that we're seeing right now, let's say this continues the next 3 days. Once it slows down, I think you're going to see Netflix being a big cap now, follow its own path, being a growth company, and continue to go up.
Okay, real quickly, the three to end the show here. J. Dot here in the chat room's asking about the 3-day rule. Could you just go over that real quickly?
Sure. This applies more to the downside, but you can also see it in some names on the upside. Typically, on the downside, your range expands, and because the fear is stronger than greed, the impact on individuals, and you would get 3 next to each other days of large bars going red and going down, and typically you're looking for the 3rd day low touching or possibly small amount exceeding the 3 sigma, which is 99.75 of a travel distance. Once you get there, the sellers are out of the way.
Okay.
Remember, if people want to sell, not to short, but to sell, okay, they're looking at the chart. As the fear grows, more selling happens, right? So volume, you get a spike, and you get these long bars that are red. If you overlay sigma channels, you'll see the 3rd day typically touches or slightly exceeds the -3 sigma.
Okay. All right, Fari, thanks a lot for coming on, giving us your analysis here on the market going into the expiration of the options tomorrow. Thanks again. Have a good trading day. We'll be back with you next week.
Thank you very much. Thanks for your time.
Okay.
Thanks, Fari.
Bye-bye now.
Fari Hamzei giving us his approach on the market. Dennis, a little bull and bear talk there, huh?
Yeah, I always like Fari's perspective. He's a lot more quantitative than I am. Like, I've always considered myself just like a logic trader. I always try to think what everybody's doing and try to figure out which side the herd is on, and always going the other way. And it's interesting, to read, and the quant stuff works too. I mean, obviously, do whatever works for you. If you're having a lot of luck, doing the quantitative stuff out there, all for that, because there's a lot of awesome quantitative traders out there. And I think the market's even becoming more quantitative as obviously it's becoming automated with high frequency trading, with everything else. So I think there's a lot of relevance in a lot of the stuff that Fari says. So it's always interesting to get that quantitative perspective from him.
Yeah, and I think he just follows his rules.
Yep.
As far as the 1 sigma, 2 sigma, 3 sigma, those are probably his proprietary indicators, and he sticks with them, and he'll wait. Like, you talked about the Cisco. I mean, it's a low price stock. It doesn't fit his criteria for trading. It doesn't fit his setups. He'll watch it as an indicator of the just for what's going on in the overall market. But, he's not gonna play it if it's not there. And I think that's what a lot of young traders and also experienced traders try and do is force the issue, and that's when you get in trouble.
It is. It really is. When you're trying to make something happen, there's not something there. That's when I always get in trouble. Sometimes, like I always say, between 11 o'clock and 2 o'clock, the middle of the trading day, it's lunchtime. There's a lot of just high frequency traders just jockeying and trading with each other. And there's not a lot of real institutions. There's not a lot of real money out there. So it's just basically, sticking your feet into a pool of hungry piranha at that time. And I think that time of the day is always the time when I get hurt. But if I'm sitting on my computer, I can't help it. I'm like addicted to trading. I got to make something happen. And I bet you if I was to sit down and analyze my trades from even a time perspective, between those hours of 11 and 2, it's probably a lot. Probably my poorest production hours because there just isn't a lot of things happening. Traders typically make their money by trading against fundamental players or more uninformed players. I'm not saying that fundamental players are uninformed, but guys that have a longer time horizon. When you're going against some high frequency trader and trying to make money against some high frequency trader, good luck. They have so much more money. But at the open and they have so much more information. But at the open and at the close, there's so many different types of participants. And that's why I think the best opportunities are still in that first half hour and in that last half hour. And that's always been my gravy train is that time of day.
Okay, let's just before we bring on our guest, Grier Eliasek, President, Chief Officer, Director of the Prospect Capital Corporation. Dennis, we've been talking a little bit about the financials, and they just kind of begrudgingly have gone along with the market rally here. Now we're getting a pullback here, and you have a stock like Goldman Sachs here, just a couple points off. It's lower the move here, just under 160 here. Are the financials the culprits here for the market sell-off?
They're not as strong as everything else. I'll tell you that. They have not been the leaders here this year. They were very weak. They led us on the way down. Market rallied. Some participation, but not a ton of participation. Like you said, Goldman Sachs is still only $2 off its lows. Look at that GS chart, though. I was pointing this out yesterday on Twitter. $160 at bottom there. How many times in a row? 1, 2, 3. Like between 160.10 and 160.32 is a quintuple. Is that how you say quintuple? Quintuple bottom there. 5 times we bottomed in that same area. And here we are only $2 away. If we do significantly pull back, I'll get down and dirty try that 160 again. If it's worked 5 times, maybe it'll work 6 times.
Yeah, you mentioned that 1, 2, 3. There was 5 lows in that area, and then you had the actual lows of the move at 159.77 and 159.85. So that 160 area looming large here. Then I was looking at this one on the upside when I was doing an update on Benzinga Pro late in the day yesterday, and I just noticed that 164.96 was your high on Tuesday, and then you got a little bit above that level, but not too much on Tuesday. On Wednesday, got the 165.23 here. So just that old resistance, and then it just happened to coincide with another high that you had. Well, you had a 165.52 high back in February. That's another 50 cents away here. So keep an eye on Goldman Sachs today if it gets back down into the lower 160s.
Interesting, Joel, too, here is I'm just looking at the imbalances here, the opening imbalances there. And some of the weakest ones, one of the weakest ones I'm seeing right now is Morgan Stanley. 169,000 shares to sell. That's enormous for this stock. I'm actually looking in the book. Somebody's trying to offer a cool 95,000 at $30. And this is liquidity in the New York book that will become active at 9:30. So somebody's heavily offered there. And it looks like this Morgan Stanley could be one of the weaker ones here. Also, Bank America, which has 332,000 shares to sell. That's not quite as relevant as Morgan Stanley because the Morgan Stanley price is twice as high, but it's still significant here, and that's why BAC is trading down significantly in the pre-market too. JP Morgan, 61,000 shares to sell. Citigroup, not as much, only 34,000 shares to sell. Wells Fargo, 52 to sell. So and when looking at the imbalances, those are the ones actually sticking out to me. It is the financials, which we were kind of thinking that they might be relatively weak. And if those sell imbalances do hold up and don't change or get offset, it does look like those stocks are going to open a little weaker than the market.
Yeah, that Morgan Stanley, that order's offering right into yesterday's low, which was 30.02, offering it to $30 level. If you're leaning on that order, you get a short off in the high 29.90s. Get a bid out there, maybe at 29.60 or 29.55. You had three lows back on let's see here. Friday, Monday, and Tuesday here, 29.38 to 29.59. So call that whole 29.50 area is pretty good support if you're looking for a quick rebound in shares of Morgan Stanley. And before we go to our guest here, what do you think, Dennis? Finally a top here in Facebook, double top.
It's potential there. I don't know if I'm going to say it's the top here because this thing just continues to grind higher here. 65.06 the high from 2 days or yesterday, and $65 the high from yesterday. So you can call it a double top. We're a buck off it now, trading down 40 cents in the pre-market at 64.05. So I definitely think you're going to see some resistance up there in the 65 area. Big hole numbers, probably a lot of weekly open interest there on the weekly options there too. So keep
Right.
that in mind as well. If this thing goes in a rally, I think 65 will struggle. But you got to respect the relative strength in some of these things because we're down 11 points and Facebook's only down 40 cents here. Even Tesla is only down a couple of bucks. Well, I guess Tesla's down a couple of bucks. That's in line. But I'm not sure. I think, you definitely have some resistance up there in the 65 area, though.
Opening into yesterday's low right now at 64.05. That's where we're settling at right now. Below that level, your lows from Monday and Tuesday, 63.35, 63.47. So that could be a relevant area of support. Okay, we're going to take a quick break here now and bring on our guest, Grier Eliasek, President and Chief Officer, Director at Prospect Capital Corp. We'll be right back with you. Welcome back, traders and investors. We have a special guest today. We have Grier Eliasek from the Prospect Capital Corporation. Nice enough to join us this morning. Grier, how you doing?
I'm doing very well, Joel. Thank you so much for having me on your program.
And you made it. You made it in through the snow.
I did indeed. One of the brave ones.
Okay. So give us a little bit of your education and market background.
Sure, Joel. I've been working the past 2 decades. I have an undergraduate degree in chemical engineering from the University of Virginia and an MBA from Harvard Business School. And I've been working here at Prospect for really the better part of the last 2 decades, growing and building this business for our shareholders.
Okay, so chemical engineering degree. How does
Indeed.
that? Yeah, how does that apply to the markets now?
Well, a couple of different ways. First, our company finances generally private middle market companies, and we've done a fair amount in energy over the years.
Okay.
So having a background in chemical engineering has helped. But mainly the engineering training helps to add to the so-called scientific process of how we underwrite and invest in loans and other yield-oriented investments.
Okay, the math then, basically, right?
Exactly.
Okay, and your current role at Prospect.
I'm the president of the company and co-founder of Prospect, which we took public in 2004. So this is our 10th anniversary as a public company. Our market cap, by the way, has grown from about 100 million a decade ago to about 3.5 billion today. So we've experienced a lot of growth.
No, that's great. Okay, so you probably get a lot of companies, coming your way. What's the ratio of companies that you invest in, versus the prospects that you look at?
Sure, it's a pretty low book-to-look ratio. We invest in about 2% of the deals that we look at. So that would be 98 turned down for every 2 or so that we invest in. And we put out term sheets on 10 to 20% of what we look at, and then we'll invest another 10 to 20% of those, which is how we get down to the 2%. And there's a real premium on originating quality transactions in our business that we try to capture to benefit our shareholders.
Okay, so are you out there scouting out the investments, or do you pretty much have a steady stream of prospects coming to you?
We do both. We believe, again, strongly in capturing a premium through proactive origination. We have about 100 people, which makes us the largest dedicated middle market origination team in the industry, and that means we can cover more ground and work on more deals than others. We cover about 800 private equity firms. We have a call center that calls on about 4,000 intermediaries and makes hundreds of outbound calls every week. Our management teams come across, manage 130 portfolio companies that send us deals. And whenever we close a deal, we let 75,000 people know about it. Since we've been in business for 26 years, we also see a lot of deals that come to us as well.
Okay, so is it cyclical? I mean, are you looking like at a lot of industries at the same time, or are you always looking at a broad spectrum of different industries?
We try not to redline industries because we can adjust how much capital we advanced. Generally, a cyclical company will have a lower leverage ratio than a non-cyclical. And we've been successful with both. For example, energy, of course, is a cyclical industry, and our firm has a long history of investing in the energy industry. And we have an office in Houston, as well as other offices around the country. We bought, for example, an energy midstream company called Gas Solutions years ago and sold it a few years later, making about 6 times our money and a nearly 60% internal rate of return. And we've made a number of investments in energy services companies that benefit from horizontal drilling activities and in unconventional oil and gas plays. Financial services is another area. We actually reap significant tax benefits by investing through partnerships at the portfolio company level in consumer finance and other types of companies. And then we as a business development company, in our structure as a public stock, pay no taxation as long as we distribute at least 90% of our income to shareholders. That's how we are paying out a very attractive 12% dividend yield right now. So this is a very tax-efficient industry, financial services, of one of the industries that we focus on.
Okay, are there any industries that are kind of popping up on your radar now for like the next year or next 5 years?
Sure, financials are certainly one of those. There's a lot of discussion about interest rates and interest rates going up, and we're watching that. Our financial services companies don't utilize a lot of leverage, so they're less interest rate sensitive. We do have a growing economy. Default rates are fairly benign right now, and that's a great environment to do deals in that sector. Our financial services portfolio is currently generating in excess of 20% asset yields. It's the highest portion of our portfolio. So that's one area that we're interested in. But we have a diversified portfolio, 130 companies. We're in lots of different industries, and we find being diversified helps us sleep well at night.
Okay, nearly a 12% dividend yield. Is that sustainable in this environment?
Well, we focus on covering our dividend yield. We actually have under-distributed relative to our income. We've built up a significant storehouse of value of undistributed earnings. So that's a great indicator for the future. We also have declared forward, and we pay our dividend monthly. We've declared forward dividends all the way out to September to give folks visibility and confidence on that dividend and its sustainability. We, of course, would like to see that dividend yield come down over time through share price appreciation.
Right.
And we've done really not a lot of proactive discussions with the outside world, I guess you would say. We've been very internally focused on deal making. And through discussions like these, hopefully our undiscovered gem of a company will get out there to more people.
Okay. Is there a typical size of the companies that are in your portfolio, or will you rule someone out if they're too big or too small?
So these are private middle market companies. Generally, we focus on sizes between $5 million of EBITDA, earnings before interest, taxes, depreciation, and amortization, up to $150 million typically. So we invest across a broad range of private companies. But we have a big competitive advantage by being able to hold a lot of capital in one place. Last month, for example, we closed a $260 million financing for a company called Broder, which is the largest T-shirt distributor in North America. And there are very few capital providers in our industry that can hold transaction sizes that large. So we really use scale to our advantage.
Okay. And why would a company come to Prospect as opposed to just going to a traditional bank?
Well, banks are under a lot of pressure from regulators right now, and are really generally can only finance working capital, receivables, and inventory because of regulation that requires banks to have fully collateralized positions. If banks stray from collateral to pursue cash flow lending, aka leverage lending, then banks are subject to leverage constraints. There's new rules that have popped up in the last year that make advancing such capital really not feasible for many situations. So there's a vacuum that's been created there for private companies, and that's where we come in as a non-bank lender. We don't take deposits. We instead raise financing from the capital markets in a highly diversified fashion.
Okay, back to your dividend yield here. DJ is popping in the chat room and points out that your payout ratio is 114%, and your dividends based, only on your FFO EPS of $1.15.
Our dividends generally are close to our net investment income. EPS can swing a little bit based on adjustments in the mark-to-market portfolio, the valuation of the underlying book, where we have a very robust process, a third-party valuation process for every company every quarter since inception, which is pretty different from others in the industry. That's in the current fiscal year, we're pretty close for dividends versus net investment income. In prior years, we had significantly greater net investment income than dividends. Eventually, we have to pay it out or face taxation. So again, we built up a nice storehouse of value that we can use as a cushion for the future. We also are reasonably under-leveraged. Our businesses are only running about 0.5 debt to equity. We're allowed to go up to 1-to-1 debt to equity. And since we have diversified access to funding, lots of different markets, the convert markets, the bond markets of various forms, we intend upon utilizing that for accretive growth for our company.
So you're basically paying out all of your earnings in dividends to your shareholders. So where are the potential risks to that yield?
Sure. So this is a credit business, and we're providing capital to these middle market companies, and of course desirous of getting that back. So the risk is really a credit one pertaining to the performance of the investments. We're pleased to report that in our portfolio, we have not originated a new investment in over 6 years that has experienced a payment default or non-accrual.
Wow.
And so our cumulative non-accrual rate is close to zero. So we've been focused on high-quality situations where our debt is amortizing, we're being paid down and paid back. But there is risk, of course, attached to each of those investments, and we're not promising a mistake-free future. But we think the diversity by industry, by company name, the credit quality that we've put up for many, many years now is a very good indicator for investors.
Okay, so let's get down to some interest rate talk here, because obviously a low interest rate environment is conducive, to what you do, the availability of money, and certainly been plenty of that available by the Fed. So short-term interest rate outlook, and perhaps go a little bit longer term, maybe go out 3 to 5 years. You think this low interest rate environment is here to stay?
Well, the Fed obviously has given us some commentary this week on that related to the taper, and then everyone's pivoting, saying what's going to happen to short-term rates, and that impacts our business because as LIBOR increases, we actually get paid more on our assets. We're running at about 90% of our assets floating rate. Our liabilities are almost entirely fixed rate by design and intention because of the low rate environment we've been in. We've sought to really lock that in for many years to come. So as rates go up, we expect to benefit. It's tough to handicap when exactly that'll occur. It seems like the taper is a 2014 event, and LIBOR may be more like a 2015 event. When it occurs, it can sometimes occur quickly. But we feel like we have downside protection by virtue of, rates can't go below zero, and only upside as rates go up. And this makes our business very interesting for investors relative to high-yield bonds, which, of course, are fixed-rate investments and get punished as rates go up. And we're paying out several hundred basis points higher a return than what a high-yield bond would pay out. So we're seeing a rotation because of interest rates from high-yield bonds into more of a floating rate situation, coupled with attractive dividend yields through our business development company.
Okay, just real quickly, you said you guys did IPO in 2004, so obviously you were able to navigate the financial crisis. Did you guys just really, reel in, the investments that you're doing and get very conservative, or did you look at that time period as as a lot of opportunity, and you kind of opened up the floodgates?
We saw it as opportunity rich. One reason why we retain a lot of dry powder, a lot of liquidity in our business is when you have dislocations, a European flash crash, a recession, those that have capital can do tremendous deals. Back in 2009, for example, we did the first acquisition in our industry's history. We bought a company called Patriot Capital. It was an $8 net asset value business. We bought it for $4. That book has paid off almost entirely, and we've reaped more than 40% IRRs on an unlevered basis. We're value shoppers, and those tumultuous times are great opportunities to make money. That's not necessarily the environment we're in right now. It's more of a frothy environment from a credit standpoint, and we're being very careful and very choosy about what we get involved in. Having a diversified focus helps a lot. Because we get involved in everything from lending money to private equity-owned companies, lending money to closely held companies, buying companies outright of different types. We're big players in the structured credit industry. And we also have some real estate in our book, too. So being diversified allows you to be opportunistic, and we like dislocations from that standpoint.
Okay, one final question here from the chat room. Will your company continue to issue share via their ATM program?
We have found the ATM program to be an attractive way to access the market on an accretive, above-book issuance basis. We got tired some time ago about doing large stock offerings that knock down the stock and make everyone, ourselves included, since we as management own more than $50 million worth of stock ourselves. So we like the ATM program. It's cost effective, it's efficient, it's just in time as we're funding our pipeline. We've got over $1 billion of so-called Category A deals. These are deals under term sheet with a higher probability to close, again, well diversified. So this is a great way to access the equity markets. But again, we're also accessing the debt markets to grow our book in a creative fashion.
Right, and with as of January 31st, you had 10.5 million shares have been issued. You just don't think this is an opportunity? There's opportunities now to issue, more debt to fund purchases. Are the purchases just not there?
We have been issuing debt. We're the only company in our industry that has a medium-term notes program. So we actually issue bonds on a weekly basis through, I think it's 800 different broker dealers through a wholesaler in Chicago called In Capital. It's a successful program for us, and we issue bonds ranging from 4 years to 25 years with different levels of coupons, and folks can pick wherever they want to be on that time horizon. So we have been issuing such bonds. We were the first company in our industry to ever do an institutional bond. We did that about a year ago. We might look to access those markets in the future. We've done 5 convertible bond issuances, all above book value. So we've actually opened up and pioneered many, many different debt capital markets, and rest assured that we're assessing those on a daily and weekly basis for the right place to issue.
Okay. All right. Well, thank you, Grier, for coming on to get a different perspective on the markets from someone that's running a big corporation and loaning out to different companies in different sectors. We got some good questions out of the chat room. Thank you very much for braving the weather out there and coming in to be on our show. We really appreciate it.
Terrific, Joel, and thank you so much for having me on, and thank you, listeners. If you have any questions, feel free to contact our company directly. Thank you again.
Okay, have a good day. Mighty Joe Young, how do you find all these smart people to come on our show?
We marked another milestone today, Joel. Did you know that?
No, our first president.
Well, I suppose it could be the first president, but I believe it's our first representative of a publicly traded company, unless I'm mistaken.
I know. I think you're right.
NASDAQ, Papa Sandy Echo Charlie, Prospect Capital Corporation. Another milestone today, Joel. We just keep knocking them down.
I was going to ask DJ's question about shares through an ATM program. I just wondered if you could, put your Bank America card in and get shares of the company. I thought that's what ATM meant.
I thought ATM just meant another 20 missing.
Okay, Joe, you got some good headlines for us?
I believe so. It all depends on Shubs, and he's not feeling too well. So
the Benzinga bug.
That's right. So today's editorial headlines from around the globe. In case you haven't heard already, Comcast agreed to buy Time Warner Cable for about $45.2 billion in stock in a deal that would combine the nation's 2 largest cable operators. The boards of both companies have approved the transaction, which was announced Thursday morning. And then obviously we heard some hubbub about it last night, but I had already gone to bed. With the proposed deal, Comcast almost certainly ends an 8-month takeover battle for Time Warner Cable, waged by 4th largest cable operator Charter Communications and its biggest shareholder Liberty Media, whose chairman is cable pioneer John Malone. By negotiating the deal, Comcast chief executive Brian Roberts ensures his dominance of the U.S. cable industry will be maintained, but the transaction is expected to face a lengthy regulatory review. Charter's pursuit of Time Cable, which began after Liberty bought a 27% stake in Charter about a year ago, had raised the possibility that Malone would emerge as a rival to Roberts. Malone once led the U.S. cable industry, but sold his previous cable firm, Telecommunications, to AT&T in 1999. In the deal, Time Warner Cable shareholders will receive $158.82 a share in stock for their shares, about $23 above where Time Warner Cable has been trading. Time Warner Cable shareholders will own about 23% of the combined entity. Chick-fil-A, the largest U.S. chicken restaurant chain, will stop serving chicken raised on antibiotics in 5 years. The decision was made because the company wants to continue its 67-year tradition of using the highest quality ingredients, according to Chick-fil-A CEO Dan Cathy in a statement released Tuesday. The company is also removing high fructose corn syrup from its dressings and sauces, artificial ingredients in its buns, and TBHQ preservative from its peanut oil. Last year, it removed yellow dye from its chicken soup. Cathy said the change will take some time because all its national and regional chicken suppliers will have to make the change over, including proving to the U.S. Department of Agriculture that chickens receive no antibiotics. General Motors said today that it is recalling 778,562 older model Chevrolet Cobalt and Pontiac G5 compact cars in North America to correct a condition that may allow the engine and other components, including airbags, to be unintentionally turned off. In the affected cars from model years 2005 through 2007, the weight on the keyring, road conditions, or some other jarring event may cause the ignition switch to move out of the run position, turning off the engine and most of the car's electrical components, GM said in a statement. GM was aware of 5 frontal impact crashes and 6 front seat fatalities and crashes where the front airbags did not deploy, a company spokesman said. All of the crashes occurred off-road and at high speeds, where the probability of serious or fatal injuries was high regardless of an airbag deployment, the spokesman went on to say. Failure to wear seatbelts and alcohol use were also factors in some cases, the spokesman said. USA Today is reporting the average of a 401k savings account hit a record high of $89,300 at the end of 2013, up 15% from the previous year, according to a study by Fidelity Investments. Most of the boost came from stock market gains as all 3 major stock indexes ended the year more than 20% higher. And Verizon on Thursday officially introduced More Everything. A plan promises more data, 25 gigabytes of cloud storage, and unlimited international messaging. Most important, it gives customers who have opted for its Edge monthly installment plan a break in their monthly bill, finally moving to a standard pricing model embraced by every other carrier. The change is going into effect today. Details of the new plan were leaked early on Wednesday. More Everything is Saturn's return salvo following a recent flurry of activity from rivals AT&T, T-Mobile, and Sprint. That Verizon, which has largely stayed above the fray with its claims of network superiority, was motivated to introduce this plan underscores the intensifying competitive environment in the wireless world. The reality is there are fewer companies up for grabs, and the carriers are getting more proactive in picking off subscribers from each other. Under the new plan, participants under the Edge plan will be getting $10 off of their monthly bill if they choose up to 8 gigabytes of data. The discount doubles to $20 when a customer chooses a data bucket of 10 gigabytes or higher, a move designed to get families to bundle their accounts together. Edge is Verizon's monthly installment plan that allows customers to pay for their own device and upgrade earlier. In addition, Verizon is increasing the amount of data for some plans, making the cheaper options a bit more attractive. The $40 500 megabyte plan will now come with 1 gigabyte of data, excuse me, while the $50 1 gigabyte plan goes to 2 gigs, $60 2 gigabyte goes to 3 gigabytes. Customers will see their data allowances doubled automatically. An industry group says China's auto sales growth tumbled to 7% in January amid an economic slowdown. The China Association of Automobile Manufacturers said Thursday consumers in the world's biggest auto market bought 1.85 million passenger vehicles, the first time monthly sales surpassed 1.8 million. Auto sales growth is forecast to decelerate sharply from last year's 15.7% expansion to about 8 to 10%. If you are late to the party, there are plenty of clones of Flappy Bird on the store that you can try out. However, you should be careful as several of the clones contain malware that could end up costing you a bomb, according to Sophos. The ones with malware are capable of sending out messages to premium services, which will result in unwanted charges, according to the security specialists. And even if you close the game, it can continue running in the background. Sophos advises users to exercise caution when downloading apps from markets other than Google Play, and also to run an antivirus app to ensure that their devices are safe. It seems like Microsoft plans to set that right by introducing Xbox One Media Remote. SegmentNext.com reports Amazon Canada listed the Xbox One Media Remote for a short while and later thought or was told to remove it. Good old mistakes. Although the listing is not there anymore, it can still be accessed through the Google Cache. That is not it. The same product is listed on Amazon UK as well as Amazon Italy website, which tells us the listing is not a mere mistake. Based on the facts on the listing, Segment Next knows that the Xbox One Media Remote might debut on March 4th, unless the reason for the listing being removed from Amazon Italy was a change of plans at Microsoft offices. The remote would be priced at $24.99 Canadian dollars, which roughly equals $22.70 in the United States. As far as the features are concerned, the remote is supposed to be loaded with the usual volume navigation buttons as well as playback control. Today's trivia tidbit. Sid Caesar, a comedic force of nature who became one of television's first stars in the early 1950s on Your Show of Shows and Caesar's Hour, and influenced generations of comedians and comedy writers, died on Wednesday at his home in Beverly Hills, California at the age of 91. Among the writers who wrote for Caesar early in their careers were Mel Brooks, Neil Simon, Larry Gilbert, Michael Stewart, Mel Tolkien, and Woody Allen. Of his double talk routines, Carl Reiner said his ability to double talk every language known to man was impeccable. Despite throwing his voice and double talking, he actually could only speak 2 languages, English and Yiddish. Today's trivia question on your marks, everybody. He was also given to explosive rages. Caesar once dangled Mel Brooks from an 18th-story window until colleagues restrained him. With one punch, he knocked out a horse that had thrown his wife off its back. What movie was this parodied in? Jake knows, but Jake, you're not supposed to say it immediately. These guys need a chance to guess too. You know what? You don't win the 150 commission-free trades then. You don't win. Does anyone in the chat have a guess in case you missed Joel or Jake's blurting out?
Yeah, J-Dot's got it.
J-Dot must have heard.
Yeah.
Well, in case you missed it, the movie is Mel Brooks's Blazing Saddles from 1974 when Mongo, played by the Detroit Lions' Alex Karras, knocked out the equine. That wraps it up for today's editorial headlines and trivia tidbit. Just a reminder, ladies and gentlemen, that the show would not be possible without our dear friends at Options House. That will give you 150 commission-free trades just for signing up for an account through this page. There's buttons at the top, at the bottom right. Make a click, open an Options House account, get those 150 commission-free trades just because you listened to Benzinga's pre-market prep. I hear some breathing in the background. That must mean Brent is here somewhere.
I think it means Jason came up and was pointing at things in my...
It was probably Jason.
Computer.
Normally we assume that the heavy breathing is Joel because he can't help himself.
I guess it could have been me. Who knows?
Almost over my cold. No, I was not sleeping during your update, Joe.
No?
No.
I didn't hear you. Well, I guess you didn't have a chance
I got
to
the
blurt
mute.
out
I
a
got
guess.
the mute. I got the mute button going.
You mean the mute button you've had the whole time?
Yep.
Hey, we are open for trade. Oh my gosh, another trading day. I get to spend it with all of you guys. I'm so excited. S&P 500 futures, 1804 right now. Joel, you want to take a quick look at the open?
Yeah, it's kind of weak open here. We did hit 1802 and a quarter in the pre-market session when we were on the show about 845, 850. We've gotten to 1803 though, so the bulls are defending that level here. Let's see if we can get out of the first 5 minutes of your updates and hold that 1802 and a quarter rally, and I think we get a little bit of a recovery rally.
All right, great. Well, I'm going to go over just a few of the upgrades, downgrades. But first, I do have a bit of a proposition for all the users in the chat.
Okay.
I was kind of harping on it a little bit earlier. Got some crickets. Got a response. So if you look over in the chat on the right side there, you can see we are starting to get quite a nice community of daily users in here. But I'm seeing a lot of these anonymous tags here for the profile picture. If you notice, Shub's got a nice little picture. Kyle's got a nice little picture of himself at the HQ, at the Benzinga HQ. Joe's got a nice little dog here. I'd like to encourage everyone. Let me get the URL. I'd like to encourage everyone to hop over to Mark 5, fill out their profile picture. We need some character in this chat. Basically, we need a little. I want to know what J Dot's profile picture is going to be here. So tomorrow when we get back on the show, I'm expecting to see lots of different pictures in there, and you're gonna be in trouble if you don't do that. So remember, we are in the heart of the earnings season, so a lot of these upgrades, downgrades I'm going to go over are based on earnings, the analysts sort of reacting. But there are a couple good ones in here. Piper Jaffray upgrading shares of the Children's Place this morning. That was not earnings related. They upgraded it to overweight. Also at Cowen, Athena Health upgraded from underperform to market perform. This morning, B. Riley upgrading shares of NVIDIA following results last night. They now rate that stock with a buy. And Morgan Stanley upgrading shares of C-Trip to overweight this morning. On the downgrade side of things, we have multiple downgrades, multiple firm downgrades this morning on a number of stocks. Angie's List getting downgraded at both Raymond James and Stifel Nicolaus. Itron also getting downgraded at Canaccord, JP Morgan, and Breen Capital. And Itron shares are down about 20% right now. Might want to take a little gander at that one, Joel. ITRI is the ticker. They did have earnings last night, and apparently disappointed. Stock is down actually about 16% right now.
Okay, let's take a look at ITIR.
ITRI. India Tango Romeo India, I believe.
That's like
This is like a smart grid company.
That's like a Jake stock.
Yeah, kind of obscure.
Okay. Gap down. If you were long this thing, oh boy, you're in trouble now. Gapping down from 40 to 33.20. I guess the good news for shareholders would be is that we opened up at 32.42. Then we only ticked down another 12 cents, and now we got a little bit of a rally going. So for you shareholders here, or people that bought the open, let's just hold that opening price. Holds up. If you go back to 2012, the stock did have a low at 31.47, but let's just keep an eye on that opening range there.
We did get earnings from Lorillard yesterday morning, and this morning we have Jefferies downgrading the stock. Now rate that stock with a hold. The Medicines Company ticker there is Mike Delta Charlie Oscar. Shares are currently down, let's see, about 14%. Downgraded at both Jefferies and Credit Suisse this morning. Let me just remember that news really quick. Actually, the stock was halted throughout the trading session yesterday. There was an FDA panel for the company's Cangrelor, and that panel is recommending voting against approval by the FDA of Cangrelor. So we have shares plunging this morning. Last one here, Oppenheimer downgrading shares of Regeneron from outperform to market perform. This has been a recent momentous stock. It's only down about 0.5% on that downgrade this morning. A couple of notable new coverages this morning. Nomura initiating coverage on some of the retailers here. Actually, a lot of retailers this morning. Let me just go through a couple of these really quickly. They are now rating Walmart, TJX, Macy's, Kohl's, and Lululemon with buy ratings. Deckers is rated neutral. Target also rated neutral. And then they slapped a reduced rating on shares of JCPenney. And JCPenney did have a little bit of news this morning. I think Jake is going to be rolling over here in a sec to sort of end the show with you. But maybe JCPenney is a good one to start on, Joel. They announced a new CFO. Edward Record is his name. Ken Hanna will be stepping down as of March 24th from JCPenney. What's the stock doing this morning, Joel?
The JCPenney stock here battling with the $6 level here. Looked at this thing a couple days ago. Did put a double bottom in. Where was that exact double? 490. Got under $5, hit 490, 490. Now we got the rebound. Back over $6. Spent a couple days, 604, 606.20. Now 605 here. Trading right on yesterday's low here. So JCPenney, if it wants to get back into the 6 handle, needs to hold 586. Another low of 582 here. A little bit of range bound. If not, we could slide down under 550 to 534.
Well, Joel, I figure I'll hop on the show at this point, and we can kind of carry it through the market open. Wanted to hop into to a few of the couple of the companies that reported earnings this morning. Get things started with Pepsi, Papa Echo Papa. There's a ticker. EPS came in at $1.05 versus the $1 expected. While revenues came in at $20.12 billion, which is slightly thin. They were expecting $20.16 billion. So Pepsi beating on the bottom line and missing on the top. So waiting on some guidance there. Joel, what did you think of Pepsi's chart right now?
It was offered. Dennis was pointing out this thing was offered pretty heavily at the previous day's low, which was 80.98. Open below that level. Traders leaning on that seller. 80.77 open. Pop the dime. Now you are coming into support here. If you did short that open, keep an eye. You had a low on Monday at 80.16. We've ticked to 80.22, getting a little bounce. Perhaps an institutional bid at the $80 level. If that doesn't hold, you got another precipitous drop all the way down to 79.26 here. But hey, if you did get a short off that open, you got 50 cents in it here. Keep an eye on that 80.16 low.
Another earnings report we had this morning was Goodyear Tire. Golf Tango is a ticker there. EPS came in at 74 cents, was the expected 63 cents. So a nice beat on the bottom line there. While revenues came in at $4.79 billion, was the expected $4.95 billion. Let me see if I can pull up any guidance for you real quick before we take a look at that chart. Anyone following along on their own charts, that is Golf Tango is the ticker there. But Goodyear Tire with a beat on the bottom line and a slight miss on the top. Joel, what do you think of this one?
I think my buddy Ross that I swim with is going to be happy. He works there, and he's been in their stock program for like forever and a brother. So they're getting a little bit popped. Oh, too bad he has the 30 calls in his options plan. But anyways, we just hit a high at 25.68. That coincides with the high you had on January 15th of 25.75 here. Backing off that level. Really like to see that get through that resistance there and get back up into the 26s here, but slight pause at the resistance level, 25.68 to 25.75.
Another one I want to take a look at from this morning is a local company, Penske Automotive Group, Papa Alpha Golf. Company reported an EPS of 68 cents, beating expectations of 67 cents, while revenues came in at $3.86 billion, which was better than the expected $3.77 billion there. So Penske Automotive Group with a beat on the bottom line and a beat on the top. So a solid report there. That continues quite a trend for Penske. Last 7 reports they've beaten on the bottom line, while 6 of the last 7 they've beaten on the top line. So Penske, regularly impressing the street here. Joel, what do you think of the chart?
Good man, does a lot for the city of Detroit here. Give a shout out to Roger, helping out with the Grand Prix and a bunch of other things. Boy, I was going to say this thing got through $42. Already has like a $2 range in this thing already. Holy smokes, you got to be quick on this one. Like to see it get back above 42. Had multiple highs, 42.17, 42.18. You did sprint through there. You got up to 42.52, and then came all the way back down here to 40.46. So already a $2 range here. So I'd like to see it. You had to close. 2 closes, 41.60, 41.61. Now that we are trading below that, that's going to be acting as your resistance point. So need to get back above there. Coming back on the downside, I mean, the range for this day could be any. Hit 40.46. Below that, you have the lows of the move, and the lows of the move are under the under the $40 level at 39.78.
Another one I want to take a look at that did report earnings this morning that was really on the move was Generac Holdings Golf November Romeo Charlie. For anyone on their own charts there, this company is a generator company, right? And so they've obviously been benefiting from this very cold winter, and it really shows in the report. EPS came in at $1.11 versus the 90-cent estimate, so up 23% there, while revenues came in at $376.2 million versus expected $361 million. So this is one of those companies that people like to buy during disasters, blizzards, severe cold spells like we've been seeing. So Generac has been rallying up on this earnings report, but there's also a blizzard going on the East Coast, so it could be kind of a 1-2 punch of a rally here. Joel, what do you think of the chart? I know we're kind of gapping up this morning.
Yeah, the stock has had a nice rally today. Did traded higher here, traded up to 55.37. You did have a high at 55.24 back on January 16th, so did find some resistance in that area. If in fact you can get through there, another high closer to the $56 level, 55.98. Big gap and go here. 53.40 open, 53 low. So as long as you don't take out that opening low here, good to go north and test that $56 level.
Well, after the close yesterday, one of the major companies reporting earnings was Cisco. So I figure we should probably hop into that report real quick. Let me pull up those results so we can take a look. That's Charlie Sandy, Charlie Oscar for anyone looking at their own charts there. But Cisco did report EPS of 47 cents, was expected 46 cents on the bottom line, while revenues came in at 11.2 billion versus expected 11.03 billion. Now I think I really want to focus on the guidance here, guiding the third quarter for 2014, 47 to 49 cents. Street was looking for 48, so right there in range. While the fiscal year 2014, guiding between 195 and 205. While the street was looking for 198, so kind of a just nothing crazy, no crazy kind of report from Cisco here, but the street didn't seem too happy about it.
Grinded it out here, gap down from yesterday's low, 22.52 was the low, gap down to $22 area. You did have a low at just under 22 here at 21.97 back on February 6th. You made a 21.91 low here, so see if it can grind it out, get back a hold of this $22 level, and perhaps float back up to the 22.50 to fill the gap.
And just like that, we are at 9:45. So Joel, what are you thinking about the S&Ps before we close down the show?
S&Ps did hold that pre-market low, 0.02 and a quarter. We only got the 0.3 here. Got a slow drift up, about a 14-point range here. So tack 7 onto that low, take you up to 0.9 and a quarter. 18.09 and a quarter, 18.10. That's going to be your first minor resistance point. Then very well go up to test the close. Well, that's our show for today, folks. We had a great couple guests on. Hope it was informative, and we'll be back with you tomorrow.